Hey, what's going on, guys? Good morning. This is Financial Literacy 101. And for today's talk, we're going to talk about Tesla. And the reason why we're talking about Tesla today is because the Wall Street Bets group has picked this stock to reach 1,500 a call of January 2022. And I actually looked into this investment of buying this particular call. And a lot of things that have been calling things out on certain dates and certain time have been profitable for the investor who has been going with this notion. I did buy a call with Tesla. I can't share my screen. I'm here in Jamaica, but nonetheless, I bought a option today, a call option for Tesla. And as you can see, Tesla is actually ticking today. It was doing well when I first looked at it. Of course, it can change at any moment of time when it comes to that particular stock price point. But nonetheless, again, Wall Street Bets is calling Tesla a $1,500 call of 2022. And I think that's the style. I really think we need to deconstruct and break this down, why they would do this particular thing. If you notice one of the broadcasts I did last week, and those stocks that I told you was part of the Wall Street Bets actual list of how they were going to, I guess, strategically attack the market. And it's not like this is not public news. This is public news of the things that this Wall Street Bets group is absolutely doing. But essentially, I keep telling you guys, they're controlling certain stocks and, in a way, controlling the stock market of how it's performing. So when we actually look at this, you want to know, is this going to be profitable? I can tell you, out of the investments I've been looking at in the time frame, they either told you to sell or to buy. Those particular stocks have been doing well in favor of the timeline that they set forth. Now, when it comes to Tesla, let's just talk about the basic part of Tesla. Tesla is a very, very solid investment. You know, they're essentially the first, entrepreneur group to go out and create electric vehicles on the massive scale that they've been collecting. And because, believe it or not, ladies and gentlemen, electric vehicles started in the 1800s, okay? Started as the 1800s, but they were looked at as gimmicks and non-sustainable because this one was getting to fossil fuels and gas and oil and all these other things. So now that electric vehicles are feasible, they're stable, they're building a infrastructure across America and also the world, so people can drive their electrical vehicles and charge them up. And some people are looking at wireless charging. So when you think about the electric vehicle world and you think about your investments, we're talking about whether it be Tesla, NIO, you got Auto, you got Xpeng. There's a lot of Chinese electric vehicle car companies out, but you also have an American with Tesla, Lucid Air, a form of Workhorse. So these are stocks that if you're really trying to look into an electric vehicle stock, Tesla may be out of your price point. You're like, the margins of profit is small with Tesla, because at a certain time, and that's why Tesla really broke down their stock. This is why they split their stock, because they understand that when your stock gets too high, the amount of investors are going to decrease, right? Like, oh, I'm not buying one share of Tesla for $1,500. I'm not doing that. So you split the stock, but would you buy four for $1,200 and mark it down to 400? You get what I'm trying to say? So you can have more investor, more capital, you can actually gain more debt, and you can actually produce and make more money. Because the thing about it is making that stock very, very valuable. That's what it's all about, making that stock very, very valuable. So when you look at it, maybe NIO is in your price range at what, $30, $40 a share? Maybe Xpeng. I don't remember the current price of that particular stock, but you got LR Auto, you got you have all these other electric vehicle car companies that eventually, if they have a good platform, if they have a good base, and that's very easy to find, a lot of analysts will tell you, then maybe that's a stock that you should have in your portfolio. And now that I'm reevaluating this Wall Street Bets group, I'm finding out if you are privy to the information firsthand, meaning, like myself, I'm a member of their website, I'm a member of their Reddit group, and they release information, and it's not traditional. Let me just let you guys know that it's not traditional. They give information in very quirky ways because I believe a lot of these guys are really intelligent, antisocial. Nah, not antisocial because they're on a social media platform, but this nerds. And I don't mean nerds in a derogatory way. I mean, I like, nerds, and I hopefully I'm a nerd one day. That's what we should really be thinking. Very intelligent people. Some of us have been afraid to let people know how intelligent we are because we may be labeled as a nerd or a geek. Well, nerds and geeks are the ones who are making the money. Nerds and geeks are the ones who's buying the Ferraris. Nerds and geeks are the one with millions of dollars in their bank account. Okay. And the only thing changed what a regular nerd and geek look like is a $4,000 Tom Ford suit. So maybe you want to be a geek or a nerd. Little side note there. But nonetheless, what I'm really looking at, ladies and gentlemen, is that if you have the propensity, you have the capital to go and buy this call option Tesla of January 2022 for $1,500, I'm gonna just like everybody else is betting on this Wall Street Best Groups that you're gonna make tons of money off this one option. Now, some of them, they're gonna go in there and they're gonna buy 10 options. Now, this particular option to actually buy, I think would have cost me around $4,700. I don't recall the implied volatility. That's a great analytic for some people to know. When you buy a option or call or put, that the implied volatility is a percent that particular option will be profitable or be negative. So it's not really a good indicator, but it is. It's like, it's 50-50, then you're taking a huge chance. But it's over a certain threshold, then the chances are less likely for you to fail. Either you're doing a call or a put. But I'm trying to stem away because I know options is something that really needs to be broken down for those who are just beginning novice and beginning investors. I got it. But when it comes to Tesla, don't forget, and a lot of people have been somehow discouraged from investing this way. Why not invest in fractions? Because some say, you do fractional investment, you get fractional returns. That's absolutely correct. But let me tell you this. If you're not investing, then you're not fractionally doing anything. You're not fractionally multiplying your bank account. It's very imperative, especially with people with low income, that discretionary cash that you go in this blow sometimes, or you eat out 3, 4, 10 times a month, maybe 20 times a month. What if you cut that in half? Like, if you like eating out, that's cool. But what if maybe you was eating out 15 times a week? What about the 7 and the amount of money you did an estimate, you did a sum and say, I'm going to invest this, the whole dollar amount. Oh, this stock is $35 a share. I got enough for 5.3, meaning the rest of the money is still going to be invested in that stock. And guess what? When that stock goes up, you make money even off that 0.3. Don't let anyone ever discourage you about fractional investing. Whatever you have to invest it. $5, $10, $50, $10,000, doesn't matter. Even with that $10,000, if I wanted to go $10,000 into a particular stock, like Bitcoin, which I have $10,000 in, I don't even have a Bitcoin yet. But off my fractions, guess what I've made? I made $5,600 off of fractions of owning up to a Bitcoin. Think about that. I don't have a whole Bitcoin. And I have investments on cryptocurrencies on 2 platforms. But off of my one investment on Coinbase, that's not even one Bitcoin, I made $5,600. So think about that. Then some of you may say, well, how much did you put in? Well, in Coinbase, I only put in like $3,500, but I bought low, right? And now the stock is high. When it comes to Robinhood, I put 10 grand in, but I'm still up 3,200. Okay. And some investments take time. Bitcoin, we understand, came around like 2008, 2009, right after the crash, right after that so-called recession. So that's what we actually need to understand, ladies and gentlemen, is not only just understanding the stock, investing in the stock, but timelines of how the stock market actually performs over the course of time. Thank you guys for joining me this morning. I'm here in beautiful Jamaica. And if you saw my video last night, work hard actually pays off. And I want you guys to work hard. I want you to take this information in kind and know with any investment, you can either make money or lose money. You guys have a great and wonderful day. This is Financial Literacy 101. Learn money and be inspired. You guys have a good one. I'm out.